Hi, everybody. It's Jack Milligan with you again from the SPI Group. Three companies. SPI stands for Settlement Professionals Incorporated. The SPI Group houses Settlement Professionals Incorporated. Settlement Capital Advisors are Registered Investment Advisory and the Plaintiffs MSA and Lien Solution. The zero is the hero answer to the MSA conundrum and lien resolution. So this is your weekly update on structure rates. We're a little late this week. There have been a lot of activity in the structure rate market, and as predicted, we finally got the last company to change their rates and to increase their costs and lower the interest rate. That happened on Monday, and then since then we've had a couple of other companies follow suit and increase their costs and decrease their rates even further. So what's happening? Pretty strange, isn't it? Because we had the Federal Reserve this week. Chairman Powell raised the Fed rate a half an interest point, or 50 basis points as they're known. So someone said to me, well, how can it be that the Fed is raising interest rates and at the same time now our annuity companies are dropping the rate that they're paying? So it's a pretty simple explanation. And here's how it works. The Fed controls overnight rates. They control two overnight rates. They control the rate that banks loan money overnight to each other. And then they also control the rate that the Fed loans banks money overnight. So it's really a daily rate. But the market itself, millions and millions of investors here and around the world, buying and selling, push all the other interest rates up or down. And so what's happened here, and I think I mentioned it last week, is when the 10-year, and let me grab a picture here and do a share screen, but when the 10-year rate, hit 4.5 or 4.25, then what we saw were ginormous institutions and hedge funds that suddenly started backing up the truck and buying everything they could get their hands on in terms of those 10-year bonds. And the activity, I'll show it to you right now. Here it comes. So here's a share screen. So this is a graph showing the United States 10-year Treasury. And right back up here, this is October 24th when we topped out at 4.255, October 24th. So we dropped a little and then came back up. We talked about that in one of our videos, but ever since we've been dropping to the point where just this week and right now, currently, the markets are still open. We bottomed at 3.445 yesterday. Day before, we bottomed at nearly 3.4041. So we're up a little bit as we speak, but when you compare from the top to the bottom, that's 75 basis points. And so what happened? Yeah, again, the hedge funds, they jumped in here and they're buying hand over fist. And when you've got that much demand for bonds, it drives the price of the bond up, supply demand, and it drives, therefore, the prices up, and that drives the yield down because well, the yield is on those bonds is locked in. So I want to show you now our current rates, and which will also attach here at the bottom. So see if we can do this again. Another share, and here are current rates. And this again, we attach these at the bottom so you can print them out, share them with your partners, your clients. And we've also got the history. So prior emails you can download last week and the week before and the week before that. I will tell you that what you're going to see is these rates across the board going right down, and comparing them to last week in every category are off about 40 basis points. Yeah, about 40 basis points. So a basis point, there's 100 basis points per each interest rate point. So 1% of interest is equal to 100 basis points. So when we say we're down 40 basis points, we're down 0.4% on our rates. So Where are we heading next? Well, who knows? Hopefully the hedge funds will quit buying and the rest of the institutions, and the buying pressure will ease up, and that'll let the 10-year start to float up to wherever it naturally should be when it's not being chased this hard. So that's it for this week. And again, you can download these rates at the bottom of this email, and also download our definitive guide to deferring the attorney fee. These rates are good for both injury victims and attorneys that want to defer fees. And by the way, you can still get the previous higher rates till Monday. Monday at 5 o'clock, they're gone. So if you need help with a structured settlement case for one of your clients or a fee deferral for yourself, give us a call first thing Monday morning and let us get it locked in for you. That's it. Have a great weekend. Talk to you again next week. See you, everybody.